and welcome to our look at the upcoming Tuesday, January 27th trading session. In front of you, I have the economic calendar as per usual, and we do have a few announcements today that could move the market. The first one, of course, being the GDP numbers out of the UK, both quarter over quarter and year over year, and they should move the British pound and the FTSE. Obviously, the better the number, if we break higher than the anticipated numbers, then obviously the higher the FTSE and the pound should go, and of course vice versa. After that, we have durable goods orders in the United States. That will be more or less a mover of the U.S. stock market. Expect the S&P 500, the Dow, and the NASDAQ to all move off of this. More the Dow and the S&P 500, though. This is more or less an industrial number, so it really tends to affect the Dow more than anything else. And a little bit later on in America, we also have consumer confidence. It's anticipated to be at 95.1. Again, a stock market moving event more than anything else. Pay attention to the U.S. indices after these numbers. Durable goods will probably be the bigger of the two because by the time we can consumer confidence, we are getting later in the day. With that being said, let's take a look at a few charts. Okay, and looking at those U.S. stock markets, you can see that the S&P 500 during the Monday session has in fact dipped, only to find buyers and turn back around. Looks like we are in fact going to try to get above the 2060 level. And because of that, if we can, with any real conviction, it should be a call buying opportunity towards the 2100 level. We also like pullbacks, so you can see why, and those should be call buying opportunities as well. Looking at the British pound, we have gained a little bit during the session. On Monday, we still believe that the 152 area is an area of resistance, though, so until we break above there, we're not really excited about buying calls. And in fact, we're looking for resistive candles to sell those announcements. The GDP numbers out of Great Britain could be that catalyst, who knows? And finally, looking at the FTSE, you can see we have broken to the upside, and it does in fact look like we're going to head to the 6900 level. If that's the case, there will be a significant amount of resistance up there, but above there, we should make a beeline to 7,000. Pullbacks at this point in time still look like buying opportunities on supportive candles, so we are bullish of the FTSE, but we do recognize that it is definitely a bit parabolic at the moment. And with that, we've taken a look at the Tuesday, January 27th trading session.